Everybody, this is John. Welcome to the free video, and let's talk about the markets. So, of course, the market rally here has been a lot of fun, has caught a lot of people by surprise. I think the idea that this market going up is ludicrous to a lot of people, and I think rightly so. But the thing is that we're not trading what we think should happen. We're supposed to trade what is happening, and right now what is happening, of course, is that the market has had a fantastic rally. And it's done so very orderly and is not giving any signs of selling at all. And the question is can this continue? Well, from a bigger picture, we've gone from, this rally has gone to a 618 retracement. That is a normal, strong rally. This is also a point where you could start to peter out and start to roll back over a little bit, but we'd have to get some signs that that's actually going to happen. Now, there are some red flags. I think one of them is the semiconductors. Semiconductors here are leading the NASDAQ through that level. Okay, so if we go, we just saw that 618. Well, while the NASDAQ itself is pausing at the 618, semiconductors are now going through the 786. When you get through that, you're essentially just going to go retest the highs. If you got a squeeze behind it, you're going to new highs most of the time. So that's a little tough for bears. And then you've got, of course, Tesla, insanity. And not only has it been it's been a great stock to trade. And the question is, oh my God, when is it going to end? But it just broke through this trend line. So any of the remaining shorts here who are hoping to get out, they're just going to continue to get crushed here. Any pullbacks, I'm going to continue to buy them until it stops working. Remember, the biggest trades happen when the large group of people are wrong. We've made more money trading Tesla this year than any other stock, simply because when a lot of people are wrong, it makes the trend of them having to get out of that position very, very clear. We don't know exactly when the trend's going to end, but we don't want to fight that, right? And then the other thing we want to keep an eye on is the transportation sector. So the transportation sector here also, since the big sell-off began, has led the way higher, and there is no stock market that's going to roll over with the transportation sector this strong. And I just pointed out the semis, right? Well, look at the transports. We're actually further through that 786, very close to taking out those December highs, and then things could get very interesting. So overall, I think we've got a market right now that a lot of people are bearish on. In fact, it's hard to find any bulls. And as long as people disbelieve the rally and they try to short it, we're going to keep going higher. Now, there's other markets out there that I would love to short, okay? I'm going to talk about those in the premium video. I want to set some of these shorts up on Monday and Tuesday. But for the stock market in and of itself, my philosophy is very simple. If it's in an uptrend, I'm going to focus on bullish plays, whether it's selling put credit spreads or, in the case of Tesla, buying calls, because the thing is so strong, you get that 1-2 punch of the high short interest. And then if you've got something that's a little, that's acting a little weaker, and a good example is Amazon. I mean, Amazon here, that's not a stock where it's like, oh my gosh, yeah, let's load the boat long on Amazon. On this one, it's no, let's sell iron condors, let's sell call credit spreads, because it can't get out of its own way. And the other thing to keep in mind too, that for Amazon, if we even drill down to an intraday chart, I mean, we're sitting here right on the tree line. Okay, that's a huge, huge level. We got all the dots here above zero, super bearish pressure here. And when I see something like this, all I want to do is just, sell call credit spreads on weekly options and just kind of book that income, okay? So anyway, that's what I'm looking at there. We got looking at those levels, looking at the dots, and of course, a bunch of other things. So speaking of indicators, a lot of people have been asking, we just did a big class and getting clarity on, all right, so which indicators are you really using right now? So I'm just going to it's going to be completely free webinar. If you go, you're going to get 2 free indicators for attending. And it's just an educational webinar on these are the indicators that I use and why I use them. Some of them are for entry, and then some of them are for trade management, okay? Now, of the two, entry is important, but trade management's where you make the money, right? So I'm going to be doing this on Tuesday, March 22nd, from 3:30 Central to 5:30 Central. Okay, so that's 4:30 to 6:30 Eastern. Now, if for those of you, if you can't make it right then, by the way, that the software that we use, you can view it on your iPhone or iPad or something like that. Also, too, of course, you can attend a recording that'll be available a little bit later. But at least this way, you're going to have a clear picture on it. Oh, okay, that's why John uses that indicator. That's why he uses this one. And I'm really just going to talk about just like what I think is most important right now. I'll be going through kind of how and when and why I use the voodoo lines. Obviously, the squeeze, the waves and the Porsche dots, the early in and out indicator, the layup indicators, the algo levels, cumulative and comparative ticks, earning statistics, and that one again. But and then there's a couple of other ones too. But again, the main thing is just understanding, oh, that's why that one is important, and that's when to use it. All right. So anyway, hope it'll help. SimplerOptions.com/toolbox.